So first and foremost, traders, I'd like to welcome everybody to today's webinar. This is a marketplace event, but this is a bootcamp webinar. What are our bootcamp webinars? Bootcamp webinars are essentially education boot camps where we take some of the most valuable concepts that are necessary for profitability and we cram it into as short a period of time as possible. Why is that important? Well, first of all, nobody wants to spend days, weeks, months trying to learn a concept. And second of all, if you have to take a university course to be profitable in the markets, well, you're doing something wrong. Okay. I am going to take 10 years of order flow trading. Literally, I've been trading order flow for 10 years. So I can tell you, I first built my first order flow trading system in 2015. Jesus, that's a long time ago. And I can tell you that there's a lot of similarities. There's a lot of differences. The key difference for me is experience. What I've learned over the past 10 years, I'm going to give it to you in a very, very short period of time. Why is that important? Well, that's knowledge, that's wisdom, that's experience. And if I wish I had somebody when I first started to trade that could literally take me by the hand in a couple days' time and become a master of order flow. I think, wow, wouldn't that have been a gift? Jeff, I know Jeffrey's in here as one of our instructors. Wouldn't you have loved if when you started trading that somebody does what we do and in like several days just teaches you everything they know?
Oh my God. It would have cut the time curve, the learning curve down so much.
Jesus. And I tell you, like, there's been a lot of days, a lot of blown accounts, a lot of money given to the markets. I'm telling you, here we stop the bleed. Okay. So, a couple groundkeeping rules. I'm recording this. We will go over questions. We will spend time at the end of the presentation for Q&A. And the goal of a boot camp is to do what nobody else can do for you. I promise you, this is not going to be some random basic webinar where we talk about a bunch of bullshit that everybody's like, oh, here we go again. This is the same old, same old. No, no, no. I don't do those types of presentations, right? I'm all about performance. I'm all about show me results, show me the how. Don't just tell me what, show me the how. Why? Because traders are visual learners, not just auditorial learners. You need to learn by three ways. You're going to hear it, you're going to see it, you're going to do it. And that is the only way where you're going to actually become very, very successful in this business. Okay. Write that down. I need to see it, I need to hear it, and I need to do it. Okay. So I'm going to give you the all of that today and then more. Okay. Now, what the hell is order flow? Well, it's a pretty generic term. I'd like to think that it's the way that professionals look at the market. And I believe there's a big difference between the term professionals. Professionals, the word professional is a very tossed around term, but I don't really believe it should be. I believe professionals actually have information that other traders do not. I believe that if you're a professional trader, you have tools that give you a leg up than those that you're trading against. Because at the end of the day, you are trading against other participants in the market. Maybe your impact is minuscule compared to, say, a bank or an institution or a hedge fund, but you're still trading against other people and other participants. And I'm here to tell you that there's information going on under the hood of this bad boy. Like it's kind of like an engine of a car, right? You don't spend a couple $100,000 on a Mercedes that's made the AMG. Anybody hear of AMG? I'm going to use my own car for an example. For years, my wife and I were talking about buying a car. And I was always a BMW guy. I always like Porsche, like BMWs, I like those types of vehicles. But for some reason, my wife said, I really like the Mercedes, right? Well, I started looking at the engines. I started looking at what's so good about Mercedes. What's so good about the AMG? What is they're handmade. There's only one person that makes each engine. Okay. And the torque and the power, they're handcrafted exactly. So I bought myself an AMG 63, AMG GLC 63 S Coupe. It's the fastest Mercedes ever made. There's only one in Canada. I ordered it, took me a while to get in. And when I sat down in this car, let me tell you something. When I hit that gas pedal, I felt like I was in a rocket ship. And right then I knew that I would never, ever not drive a Mercedes. Okay. Now, why is that relevant to order flow? Because it's not necessarily what the car looks like, it's what's under the hood that makes the car so valuable. And it's the same thing with trading. what's going on inside of the market is what you need to understand. It's not just about drawing a trend line or whatever the case. It's really about the beating heart of the information. Now, the problem, and this is a big problem, is that everybody that I see talking about order flow makes it boring, makes it so much complicated. And I've never, ever had anybody that's taught me order flow the way I teach it. So I'm going to teach it to you the way I would want to learn if I was brand new. I'm going to teach it to you the way I think it's super easy to learn order flow. And I'm going to tell you all the shit that you don't need to worry about, and then all the stuff that you need to absolutely understand. Okay, does this make sense? And then by the end of the boot camp, you guys are going to truly be masters of order flow. Like you can literally call yourself a Navy SEAL out of the order flow. Does this make sense? Give me a yes in the chat box if that sounds good to you. And the result of this is you're going to make a lot of money. I don't know a good order flow trader that doesn't make money. Like I'm being honest with you. Any order flow trader that I know, and I know a few of them, and they're all profitable traders, like very profitable traders, because they've spent the time to understand what's going on in the data. Okay. Now, just a disclaimer here. I'm also putting together a division for order flow algos. In fact, we have a division that we're launching. We're actually getting ready to launch a syndicate program. The syndicate programs are going to be across discretionary trading and algo trading. We're actually bringing in instructors for the algo syndicate. And the syndicate, these are higher price programs, very expensive programs, but they come with a whole lot of stuff that currently doesn't exist in our product line. And we're building this now. We're launching this. It's going to be it's going to be the future of our education divisions. And in the syndicate, one of the products that we're putting together is an algo testing team that we're going to be putting together templates, and we're basically going to be optimizing templates for traders for algos all the time. We're providing money templates, like literally doing everything for the traders. And we were looking at all the automated systems, and out of all the automated systems, we have the most of them are coming from order flow. Why is that? Because there is so much ways in which you can trade order flow. It's 10 to 1. Like if you have an order flow tool set that we're going to show you today, uh, there's 10 ways to trade order flow differently than just a regular strategy. And that is the power about order flow. And we're going to show that to you guys here today. Okay. You can tell I'm passionate because I've been wanting to teach this for so long. And we finally got to the event that I was excited. Okay. Now, let's do a disclaimer. And while we got this on the screens here, can everybody do me a favor and just put in here, like, what is their number one goal right now? Like, in this, if I could give you 2 days of my time, if I could spend the next 2 days with you and coach you, mentor you, give me all of my secrets, what would that do? What would that do for you? What are you looking for? I need to know here. And then while you're doing that, make sure you read this disclaimer and make sure you understand, accept, and just disclose the fact that I'm not here to guarantee anything other than my time and my information and the software that we build. And if you can please accept the disclaimer, that would be great. Okay, so I'm seeing consistently profitable to be profitable, consistency to be profitable. Okay, so to make some money, you want to make $500 a day. I like Renita's answer. She wants to make $500 per day per account. That is a great goal. You know why, Renetta? Because I don't know if it's Renetta, but the goal is that you can actually ascertain that. You can build a business around that. I like that. I want to give my son the best life. Omar, that's awesome. I love that. Renita, thank you, Renita. Perfect. Um, a simple, small, profitable strategy with a small stop loss. Frank, we're going to talk about small stop losses today. That's the key to big arm multiples. That's the key to big arm multiples. But you need to have a killer signal to get a small stop loss. If your signal is shit, stop loss is going to get smoked. Yeah, we're going to talk about that. Great. Okay, so we got a game plan. Fantastic. Be a constant professional trader who can learn others in the future. Great, William. Great, William. Perfect. Okay, so let's get into this. I'm going to talk about what I think is the problem. I don't think we want to spend too much time on the problem because most of you guys already know the freaking problem. You're struggling, right? We don't need to keep reminding each other about that, right? Like that's like who needs to keep hearing them? It's like when you're overweight. Do you constantly want to be focusing on the fact that you feel fat, or do you just want to focus on the solution? You got to focus on the outcome, not the where you're at. If you all you do is focus on where you're at, what the hell is the point of living, man? You got nothing to look forward to. You got to look for the outcome. You got to look forward to the goal. Where am I going? But we do need to understand the problem to define where we're going. Okay. Dwayne says, I want to be developing a game plan for a brand new trader to know that I'm trading indicators. I always start as to start with learn, become skilled. Yeah, good. Dwayne, I like that. Okay. So I want to talk about why traders are entering late. Big reason. I think it's the number one reason why a lot of traders miss trades or they actually get in at the wrong locations. I want to talk about what order flow is actually meant for. Okay, there's two ways to use order flow. Okay, two ways to use order flow. One of them is a standalone system, and the other one is specifically for data extraction for strategies that you're already trading. We're going to talk about liquidity and market intent versus executed order flow. We're going to talk about realistically the process of the tape. And I think a lot of traders need to understand that. We're going to talk about professional execution models. What the hell does that even mean? That means trading systems, the way in which you're going to execute in the market. Execution models is a fancy way of saying trading systems. And the reason why we call it professional execution models or professional trading systems is we're going to use data backed information to pull the trigger. You need data. There should always be data. If you don't have data, what the hell are you doing? You're just guessing, you're just gambling. Then I'm going to share with you what you're going to experience if you are going to participate in our bootcamp. I am running a coaching program. It is a 2-day fast track mastermind. What this is going to be is we're going to take the information from today. And what I'm going to do is I'm going to run those education sessions and I'm going to trade with you. We're going to run it. We're going to trade. We're going to teach. We're going to do what you need most. You need an experienced instructor to spend time with you to show you everything you need to be doing so that you can clone it. Call that earn while you learn mentality, right? How many of you guys, if you had the opportunity to spend 2 days with me, a 15-year trading veteran, system builder, architect of most systems in our entire ecosystem, if I could give you 2 days of my time, not full days, obviously, but two times a day, would you feel that's exciting? Would you like that? That's the question. Would you love for a professional trader to take you by the hand and show you the ropes with this? Great. That's what we're going to do. So the goal here is that I'm going to have to show you why you want to do that today. And then at the end of the presentation, if you think this is what you're looking for, you can purchase the bootcamp. You can come and spend 2 days with me, and that is going to be where the magic happens. Okay. But at least I'm going to show you a bunch of sizzle today so that you don't feel like you have to buy it. It's not a mandatory thing. If you don't have the money to spend on your education right now, we get that. However, I would highly encourage you to think about where you want to go and why you want to do that. Okay. So, daily routine. Okay. I want you to remember what you put in the chat box. You said you want to be a profitable trader. Okay. To be a profitable trader, you need a daily routine. Okay. The problem is that you're probably flip flopping because you haven't found what's working for you just yet. Now, that's okay. I want you to do me a favor. I want you to sometime today go into the bathroom. No, no joke. I actually want you to do this. And you don't have to let anybody else you're doing this because people are going to probably be crazy or call you weird. But I'm not going to call you weird because I do this for myself. I want you to look into the mirror and I want you to say, it's okay. I want you to say, it's okay because everything I've done up today is the past. Everything I want to get is right here now. I'm going there now. Okay. I am going to show you how to put together a proper daily routine. A proper daily routine it involves letting go of the shit that's not making you any money. Straight up. You have to be willing to accept that some things you spent money on in the past, it's a lost cause. It's a sunk cost. I want you to also let go of the things that you're doing that are really not necessary. You do not need to spend hours and hours and hours a day looking at the charts. What you need is you need a really, really, really good trading system with a really, really, really solid entry. And as a day trader, you want to make sure that the signal gives you enough R multiples so that you can extract a lot of expectancy out of the market. What does expectancy mean? Does anybody here know what that means? Anybody here want to give a what is it? Expectancy means that every time you take a trade, you have the likelihood of making that much out of the trade over statistical periods of time. When you have high expectancy, you have a really, really good business. Most traders, oh, they want to make money. Oh, they want to be profitable. No, you don't. You want expectancy because expectancy gives you that, but also expectancy gives you data. Expectancy gives you information. Expectancy gives you hope. It gives you the information. It gives you the solution. Okay. What it's going to show you is that if you have expectancy, then you have good profit factors, you have good drawdown, you have a good win rate, everything lines up. That's the goal. I want you to write down, I am going for expectancy on a notepad or something, or my goal is expectancy. Because what expectancy means is that you will identify key information in the market. You're going to get in early, or you're not going to be chasing the market because you know the signal. Super clear entries. That's important. When you know you have expectancy, you've already proven that you have basically stopped taking low quality trades. When you have expectancy, the data is already proven to yourself that you no longer are taking stupid trades or trades that don't make you any money. You're not going to chase the market. Traders that have expectancy don't chase the market. Okay. They know exactly what they're doing. They have a signal. They have a reason to get in. They know exactly what they're doing and why. You will always execute with confidence. I'll explain why, because a confident trader knows that it's a combination of the signal, the win rate, and the R multiple. I'm going to write that down. That is critical. So let's do this right here. Key talking point right here. Okay. So this is expectancy equals win rate plus powerful signal. I'm going to make this a bit bigger here for you guys. Expecting win rate plus powerful signal. Okay, let's make sure. Plus powerful signal plus large risk reward. Okay, ratios. Okay, so let me explain this. This is your new reality. How do I know this? Because I'm going to show it to you. I'm going to give you that gift. This is a gift today. You are getting a gift from me. I am here. I am going to give you a gift that I wish that I had years and years ago. It's a gift that I had to learn through my own sweat and tears and hard school of hard knocks. I'm going to show you how to have a high win rate. It's going to be exciting. Okay, so we'll call you high win rate. Okay, give me a second. I'm just going to make this just a bit smaller so it all fits here on one slide. There you go. High win rate, powerful signal, and large risk reward ratios. That is going to be crazy profitable. You want to know why? Because if you have a high win ratio and a large risk reward ratio, wow. You know how many traders are actually trying to like there's so many traders that don't understand the power of that. And it all boils down to having a powerful signal. You need to have a powerful trading system. And the system is what we're going to be doing today. So I am going to give you the system. And then I'm going to show you how to increase your win rate by trading the system properly. And then we're going to talk about building automated brackets for your trades so that every single time you get into a trade, your risk, your stop, your targets, everything is pre-planned. That way, when you take a trade, you never have to guess. And I want you to also write something down. Okay. This is important because I trade for expectancy. I am okay with stop losses, stop outs. This is not easy. When somebody used to tell me, oh, you got to embrace getting stopped out. No, you don't. You don't need to embrace it. You just need to understand it. Like nobody wants to get stopped out. Nobody ever in the history of time is going to convince me that it's okay to get stopped out. But if you have high expectancy, what that means is you automatically have a high win rate and a large risk and reward ratio. And so when you have that combination, anytime that you get stopped out, it shouldn't phase you. You don't ignore it, but it shouldn't control you anymore. Stop losses getting hit normally control you. It'll control your emotions. It'll control your day. It'll control your life. It'll control your energy. It'll control your profitability. And so my job today is to pave a new reality. Does this make sense? This is really the goal of when I coach a trader hand to fist, like when I'm really trying to rebuild somebody from the ground up. I've had the privilege of working with traders that suck. And they literally just were terrible traders and they were just blowing accounts and like guys losing money for 13 years. By the time I was done with them, they were profitable scaling accounts and I just know what to do. I've just done it so many times that I know that no matter where you are, if I can give you a powerful signal and teach you how to properly trade it, Jesus, you guys are going to have a really, really good future with trading. How many of you guys are excited about this? Type a yes in the chat box. Yes? Okay, great. So, um, when you are reacting in the market, okay, most traders are reacting in the market, okay? And when they're reacting in the market, it's normally a result of two things, okay? Emotional sabotage. So let's talk about this. Let's just write this down. Okay, I'm gonna a couple notes here. Okay, so let's just talk about this. Reacting comes from emotional sabotage. Most of you don't realize that you're sabotaging your own destiny. Okay. We're going to get into a bunch of other details here, but I want to talk a little bit about this importantly because it is important that we identify what's got to be rebuilt here. Reacting comes from emotional sabotage. Emotional sabotage is literally a lack of belief. That's it. If you do not believe in what you're doing, there is no way that anything else will work. Well, then how do you believe in what you're doing? Well, you need something that you can basically have evidence works. You need something that works. Belief comes from proof. That's it. Nothing else. If you try to listen to somebody that just feeds you the heavens, like, oh yeah, I got this wicked strategy and blah, 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 the bullshit that comes from everybody just trying to sell you the sizzle, it doesn't work. What works is hearing, seeing, doing. All of those combinations create results. Results creates belief. Belief creates expectancy. Does this make sense? So everything else about all your chasing and your missing and your emotions and all that, it's all coming from one thing, lack of belief. And the only reason you don't believe in what you're doing is because you've had a string of losses where you've had negative reinforcement from the past that is holding your pattern interrupts in place. Now, I'm not going to get into trader psychology because I've done a lot of it. I've spent a lot of time rewiring the brain. But what I will tell you right now is that instead of going down a whole path of trader psychology, I'm just going to bring it all back to the most important thing. All that matters right now is that I reinstill belief in your ability to trade a proper signal. Does this make sense? How many of you guys type a B in the chat box that you are ready to rebuild your belief? Type a B, capital B, small b, whatever. Just put believe, but B, belief, whatever you want to do, okay? Because belief is how you start enjoying your days again. Belief is how you get out of the day and you come to the markets with excitement, or you come to the market with passion, or with the belief that you have an edge again. How do you take somebody that's consistently losing and tell them it's going to be okay? Well, you show them something that works. When you show somebody something that works, their mind automatically goes from, oh, the past sucks to, I want to try that because that's probably a lot better than what I'm doing. Hmm. That's what this whole event is for. I'm going to give you something that is going to rebuild the belief because I know what I have is very successful and I'm going to show it to you. Then you can implement it, which will then remove your emotional sabotage. It'll reinstill belief in your abilities and you'll start to trade more successfully. You guys good with this? Yes or no? Fantastic. Now, order flow, okay? Order flow is a very, very generic piece of information. Order flow is the study of liquidity. It's the study of aggression. It's the study of absorption. It's the study of exhaustion. It's the study of momentum. Okay. So if you say, holy shit, like it's a lot. Yes, it is. And what I've seen in the market is a lot of platforms or a lot of resources that are built do not do it all. We've built a piece of software that took us 9 years to perfect. Not one, not two, nine. It took me 9 years to build what I believe is currently the most sophisticated order flow tool set in the industry. How do I know this? Because I know every single order flow platform in the world. I know every single order flow vendor that exists in the world. I know all the products because I've made it my business to study all of the technology that is available. Then what we did was we brought in specific engineers that specialize in coding to build the proper tools so that I had one tool that at any given time I can manipulate the market at my whim. What do you mean? Well, if I want to look at liquidity, I can look at liquidity. If I want to look at aggression, if I want to track absorption, if I want to track exhaustion, if I want to see order flow momentum, I get to see the market. I get to control what I see in the market. This is not about looking at candlesticks. This is not about looking at just a Renko bar or a time chart. It's about going on under the hood. And when you go under the hood, you get to see what everybody else is missing. 95% of the entire freaking planet doesn't even know what's going on inside of the candles. They don't even understand it. And that's the problem. And so when you understand what's going on inside the candles, you can make a whole lot better trading decisions. Now, the other component to this is that it's very overwhelming. It's overwhelming to the new traders. And so my job is to strip away all the noise. I don't believe in complex things. I know that I can take complex information and simplify it. And that's what I'm going to do today. We're going to simplify all of this into a tool that basically I can manipulate to tell me where I want to get into the market and why. Okay. So let's get into this. When we look at the market, okay, there's two ways to look at order flow. Okay. We're going to talk about this. Okay. Now, the first one here, okay, is what we call inventory. Inventory comes from the depth of market. The depth of market is considered level two. Level two is the dome, or we call it liquidity or inventory. Okay. And the goal of this is the hard right edge. In fact, when somebody says, hey, I got a chart, what's going on next? What's about to happen next? The only way you can understand what's about to happen next without using information from the past is by looking at the inventory. It is hands down the most powerful way to look at the market from a professional's perspective. I highly encourage everybody in here that if you're going to be a day trader, that you understand, okay, you understand the inventory of the market. Okay. The inventory of the market is telling you who's placing orders above and below the market, who's placing orders at the market, who's placing more orders and then pulling their orders, which is called spoofing, who's placing their bid and then changing their bid. That's called manipulation. All of this has to do with inventory. And so we've built a tool that tracks. This is what you consider inventory. These are considered inventory levels. This is what is the hard right edge. We take the information from the dome, which is very complicated, very fast, moving, super, always moving very, very fast. It's erratic. And we take that information and we basically populate key areas on the market that are where the market's going to react. You got to remember, if somebody places a really big sell order up here from a bank, well, if it's going to take a lot to move that order, most likely it's going to drop the market. And that's exactly what this is. You can see if somebody placed a really big buy orders in the market, institutions, hedge funds, big players, they start placing these buy limit orders down here. And you can see that the market comes in here and it becomes a wall. It stops the market. It's not an accident. Like big traders are manipulating the market so they can do business. They're not just trading on a 1 minute chart. Like they're actually doing business on a trading desk. Now, you take that one step further, you go from the inventory right here. I like to call it the IV. It's like getting an IV into your veins. You're getting the best of the best. That inventory plots onto your chart, and then when the market exchanges, when you get a trade at the inside bid and ask, and it executes, we also have a tool that's called the order flow signal pack, and it'll put the order flow inside the candles. And that's where we're going to live. We're going to live on the inventory. We're going to look at how to use the inventory and then how to use the data inside the bars. All of it's coming from this. And the reason we're taking the dome and we're extracting it into level 1 and level 2 data points is so that we can easily just trade a real basic chart and know all the information behind it. Okay. Now, to take it one step further, this is what it looks like. If you really want to know what's going on under the hood, this is the heat. This is what we call a heat map. And a heat map is all of the bid, the buyers, and all of the sellers as they move the market. You can see the market came down, and then it came up, and then it came down, and then it came up, and then it came down, and then it went up and down and up and down and up and down, and then it broke down, consolidated. All that is doing is telling you at any given time, the sellers were more control here. The buyers were stronger. The sellers are stronger. The buyers are stronger. The sellers are starting to pick up some steam. But that's what's going on inside of the AMG. Remember, we talked about the Mercedes. This is the power. This is the torque, the force of the market. And all that's meaning is that at any given time, the information here is either going to be stronger than the information here or vice versa. And as the buyers become more strong versus the sellers and vice versa, you're going to see price go up and down. And they say, well, Sean, that's great. In theory, you've just taught me how to basically rebuild a car engine. How do I freaking trade this shit, right? Like, how do I actually place a trade? Well, that's where we get into the signal. We've built software that does not require you to have to do this. You don't need to do this. You don't need to be knowing this and then you don't need to be doing all this. What we're going to do is we're going to take this information and we're going to turn it into actionable signals. We have software for that. We've built tools that are going to show you how to do this. Better yet, I've got strategies that's using these tools. And I'm going to teach you some really, really powerful trading signals that are going to give you the sweet spot. You don't need to go through all of this. I just think it's important you understand the power behind it, why it's important. This is more powerful than any rudimentary trend line or Bollinger Band or some RSI bullshit. This is the beating heart of the market. And this is why professionals trade order flow, because they know that it's an advantage. Okay. Now, there's a lot of tools out there. Okay. There's a lot of tools out there that will look and they will plot a bunch of bubbles and they'll put a bunch of stuff. What I've found is that it's great visually. It looks nice, but that doesn't make you a good trader. Let me ask you a question. Okay. If I draw a line in the sand right here, okay, if I look at this chart and this chart, can you make sense of this versus just there's a really good line on the chart, that's where I buy. There's a really good line on the chart, that's where I sell. Which one is better? Knowing it's the exact same information, we've just made it so that you can actually see where to buy or sell. What do you think is better? The left side or the right side? You tell me. I'm just being honest because there's a lot of, I could sell you this, the bubbles, and I could put all that shit on my chart, but that doesn't make me money. Right? It's really good. It catches the eyes of the people that are suckers. I don't believe anybody here wants to consider themselves a sucker. Now, I'm not saying there's not great tools out there. I'm just saying that I don't really see a lot of profitable traders making a bunch of money. And that's the reality. So what I want to do is I want to make simpler tradable. It's not about being better. I'm not here to try to compare ourselves against products or companies. That don't mean anything to me. I'm not interested in being better. I'm interested in being profitable. And the only way I'm going to be profitable is if I take really complex stuff and make it easy. I like to make trading easy. How many of you guys are okay with that? If I simplify, make it easy, make it tradable, make it respectable, you guys can then deploy it. Yes? Make sense? Example. Simple is better, but the goal is we're going to take the complex information and turn it into simple signals. Exactly. So when we trade order flow, okay, when we trade order flow, I'm going to move this up here a little bit and let's trade that, the order flow trade. Um, what we're going to do is I'm going to teach you how to combine momentum with liquidity and order flow. We're going to look at delta. We're going to talk about timing, where the timing matters. And then it's all about risk management and position sizing. So what I'm going to do is I'm going to be able to do all of this with a click of a button. I'm going to line this all up. I'm going to be able to make sure that all of this lines up and that I have a really, really profitable trade so that ultimately I can do this. I can look at this chart here. How many of you guys think that that chart looks clean to you? Does this look like a clean chart? What about this? Tell me the chart on the left. This one over here is using an order flow tool. Do you see that this looks clean to you? I haven't taught you where the signal is yet, but just from the naked eye, is that really clean? Not a lot of stuff going on. Yes or no? The chart on the left, clean or not? What about the one on the right? You can see the circles. The circles are the trades. Pretty clean. Yes? Super, super clean. So these two charts, so these charts are a representation of all of the stuff I've just shared with you. This is the way I look at order flow. I look at order flow like this, and I look at order flow like that. Yet everything that is going on these two charts tells 1,000 words, meaning there's a whole lot going on in here that you do not see. But there's a few signals that you will see. And when you get those signals, that's when we take trades. Here, there's a few big lines on the chart that you see. And when you see these big lines, that's where you take the trades. Why? Because that's a bank placing hedge levels. That's an institution holding the market here. And we're going to talk about when to trade them and when not to trade them because that's more powerful than any indicator than you will ever trade in the history of your career. Why? Because that's the inventory of the market. That's technically like having a phone where you can pick up the phone and call JP Morgan and said, "Hey, is that you that's got the orders at 66.65 on the bid or on the ask?" "Yeah, Johnny, that's me. I'm going to be placing 5,000 contracts there until we fade it down." "Oh, great. Perfect. Okay, thanks. I'm going to trade there too." Boom. That's exactly what this chart's doing. Having this line on this chart right here for this much time from 10:40 all the way to 11 o'clock, what that means is the institutions were holding the market with such huge size at that level that that line stays stagnant. Same thing down here, this blue line right here. The reason this hit the bid here right here, well, from 10:30 in the morning till 10:50, that line was there. That's 20 minutes. Those orders were sitting here. 20 minutes, we could have seen those levels there. And that's power. That is so much power because now we're looking at the hand of the big players. And let me remind you, every day that you and I go to the market and open up our computers, you got to remember who's participating here. Like where are we actually going to do business? We're stepping into the arenas of the whales, the master juggernauts of banks and institutions. We a lot of times retail traders forget that. And these tools, okay, this is the order flow signal pack, which is, in my opinion, the most fascinating software I've ever seen. And this is the L2 liquidity heat map, which I just think is incredible because for 1/10 of the price, you can get what order flow platforms charge like through the roof. You don't need an order flow platform. You just need an indicator on Tickblaze that basically does everything at 1/10 of the price. That's the key. Okay. Now, how many of you guys are interested in learning how to trade this stuff? Yes or no? How many of you guys want to learn the signals? So one of the things I want to do now is I want to go into the charts and I want to show you some things. Okay. It's built for you guys. So what I'm going to do is I'm going to show you, this is a trade I literally took on order flow. And there's a reason I took a screenshot and I can show you here. I'm going to show you how to take that. I'm going to show you how to take the right trades. I'm going to show you real live markets right now until they close. I'm going to show you examples on the NASDAQ. We're going to take a look at the NASDAQ. Um, I'm going to show you how to use the signals. I'm going to show you how to keep things super clean and easy. And I'm going to turn something that is super complex into literally any monkey can trade it. Not that we're monkeys, but hey, you never know where we come from, right? The reality is that I'm going to show you how to make a lot of money doing this, and I'm going to make your life super, super awesome. Okay. And the way that I'm going to do that is through education. So the way that I teach traders is I want to show you how to determine the bias first. Why is this important? The bias is everything. It's going to determine which trades you take. Then I'm going to show you how to take the right signals so that you're trading with the market always, 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 always with the market. As an order flow trader, we never want to be pushing against the market. Why? Because order flow is meant for smaller term trading. It's not meant to be the picker of the huge reversals. We're not trading this on 4 hour time frames. This is not big, big reversals here. We're going to be trading the flow of the day trading realm of the market. Okay. We're going to look at liquidity on the L2. I'm going to show you entries, okay, that are going to be on the execution software. I'm going to show you how to do that on a range chart or a Renko. It can be done on Renko. And I'm going to show you how to do this for prop firms. Why do I want to show you how to do this for prop firms? Because 99% of traders are trading for a prop firm and they're doing it all wrong. And they're not making any money and they're not taking payouts. And so my job is to hopefully get you making payouts in a big, big way. How many of you guys would like to make tens of thousands of dollars after this week, after I teach you everything I know about order flow, and then you start taking payouts every single week? That's the goal. Good. It's possible. It's absolutely possible. And we're going to do it right now. Great. Let's do it. Let's get into this. And let me take a look here for a second. I'm going to load the software. Interesting. Bear with me here. I had it ready, but I guess Tickblaze shut down on me. Bear with me, guys. I'm going to load it up. Bear with me. Anybody got any questions while we're doing this? I'm just going to load the charts here. I'm just going to set it up. I had a demo plan, but unfortunately the platform shut down on me. Anybody got any questions while we're doing this? Let's put them in the chat box. Bootcamp dates and time. Maybe guys, can you guys help me find that? When are the bootcamp dates this week? Jeff, Pete, you guys know? I think it's 1 second here. Maybe I stepped out.
Hold on, I'm checking too.
Nope, it's there. I popped it in.
June 4th and 5th. Great. All right, let's do this. Let's pull this up here. New dome. Grab this here. Okay, I'm just going to grab it here, guys, and show you. So we're going to grab a, I'm going to do this. We're going to show you a few things, okay? Can everybody see the screen? Yes?
Yep,
Okay.
all good.
So essentially, what most people don't realize is that there's two ways to do this. You can use L2 liquidity. This is L1 liquidity on the right-hand side. This is L1 liquidity. What's L1 liquidity? L1 liquidity is data that's going on inside of the candles. L1 liquidity means it's already executed inside the inventory and it's already transferred into the chart. Okay. And so essentially, what you can also do is there's also what we call L2 liquidity. We're going to do this here. Add this up. Grab this here. I'm going to show you here. Add the NQ here. I had it all set up too, and it's all perfect, guys. It's all good. I don't let the technology get the best of me. So let's do this. I'm going to turn this down to a very, very small time frame. I'm just going to show you some really, really cool things here. A minute. Let's do a tick chart. Let's do a second chart. Let's do seconds. Let's do a 15-second chart. Okay. And you can say, wow, that's a small. I just want to show it to you. I want to show you everything that's going on inside here. Okie dokie karaoke. And then we're going to basically, I have a template for this. Let's do NQ liquidity. Right here. Perfect. So here we go. So let's do this. So we'll let this ride. Okay. And what we're looking at here, okay, and we're gonna show you this in a second. So what you're looking at is a story. And the story is very unique in how you look at order flow. Now, there's two things I want to do. I want to explain the story, and while this is loaded, I'm going to save it as a desktop, so we can do this. Okay. So essentially, what we've got is we've got inventory right here, and what that inventory is doing is you don't realize this, but this level right here. Take a look at this big order right here. This is a big order on the bid. We say, well, that's way down here. Okay, well, that's somebody with power that is putting big orders into the market. Okay, you say, well, what do you mean? Well, you can see up here, there's nothing really up here. And I have the settings where I can actually change the settings. I can change the strength of the orders inside of the inventory. But the point is that as the market trades, okay, and as the market does what it's going to do, we're going to see colors plot here or plot here randomly. And what's going to happen is you're going to see them stay there or you're going to see them pull them. Okay. And the way I like to do this is I normally like to use inventory as information. I'm not usually trading this chart. I like to know what this is likely to do. You see here, like we've got this line here. And this line that it's staying there tells me that somebody wants to do some pretty big business here. It's not a big guy, it's a medium guy. And that medium guy is putting in size greater than 20. And so that tells me that inside of the bid here, inside of all this information that's going on in here on the left-hand side, right? All of this stuff here, that something pretty important is happening right here. Same thing down here right now. Somebody else is positioning their trades. This is not strike. This is order flow liquidity. And it'll be interesting to see when the market comes down here because the market's going to seek liquidity. And the goal here is that you can ultimately watch what's going to take place in the liquidity here. When the market comes down to this location, what's it going to do? It's going to fill the orders. Okay. And so we'll watch. We'll watch if it wants to come. We might see sell orders come up here. These are buy down here on the bid, right? But the point is that this is liquidity. And personally, if you're to say, well, Sean, how do I make a lot of money? Normally, you're going to be trading on this chart here the most. But it's really powerful to understand this. Look at this. Sellers are stepping in. See that? See that? It's coming in. And look at the pace on the candle. As soon as those sellers stepped in and took that aggression, the market dropped. And you can see, say, well, look at it. Look at it. As soon as you started seeing those people come in, now watch this. They're going to come down to try to attack this level of liquidity, right? It might absorb all this and rally. Look at this coming right down here. And we'll see if we're going to catch a bounce from this. Look at the big sellers that are stepping in here right now. Those big sellers, they're driving the market down. You see this? You see that level just stepped in right out the gates, and now they just pulled it. You see what just happened? That's called spoofing. Okay? That's called spoofing. Big orders coming in, then they pull the liquidity. But remember, this was here the whole time. We talked about that level being here. So it's interesting. You'll see big orders come in, drive the market down, or they'll pull the liquidity. And the reason why I think that this is for really advanced trading is that I just find that sometimes there's so much subjectivity to the liquidity that it makes it very, very hard for traders to ascertain a very profitable trading edge, even though this information is critical. If I drop this down and I drive this down to say 25, right, and I put this at say 20, okay, you're going to see different colors. Let's say I put this at 20, I put this at 10, I put this at 5. You're going to see different colors in the tape. You're going to see a really different story. And you're going to see up here, see this big red line where they stop the market? That's, look at the big liquidity up here. And this is what we call a heat map. Now, to me, if I'm going to sit there and scale 20 prop accounts and I want to trade for a very profitable edge, I'm going to use this software for information. I'm not going to use this for my strategy. Now, does that mean that you shouldn't buy this type of software? No. I think everybody should have this tool running on the sideline so they understand what's going to happen. But if you're wanting to make a shitload of money, I don't think the subjectivity of an L2 indicator is going to be the answer to your prayers. You say, well, wow, Sean, you mean you sell level 2 software? I mean, what do you mean? You say, what about Bookmap? What about all these? What about deep charts? Yeah, but all that shit is noise. That's not where the real big money is made. That's not where the real big money's made. That's where confusion lies. That's where subjectivity lies. There's too much subjectivity in trying to understand the inventory. There's too much, oh my God, look at the market, it's dropping. You say, oh, well, how come they're not lot? You know what I mean? And that's where a lot of traders, you're here to learn how to make a lot of money, not be showing tools that may or may not do the job. How many of you guys agree with that? Yes or no? Exactly. So here's what we're going to do. We're going to get rid of the liquidity. We're going to get rid of the dome, and we're going to focus on the order flow signal pack. And you want to know why? Because this is where I believe traders are going to make the most amount of money. Does this make sense? Does this make sense? Give me a yes. We're going to simplify down. Great. Bar pattern filter. Give me a second here. Great. Fantastic. Now, there is no way that in the next 30 minutes, I can teach you everything that I think needs to be taught about order flow. But what I can promise you that in a boot camp, I can absolutely teach you everything that you need to know about order flow. And I can also give you the trading system that's going to make you a shitload of money. Now, what you're seeing here, okay, we're going to turn on two signals. Now, there's a lot of stuff going on here, okay? What I've done is I've loaded a 100 range chart. Why 100? Well, that's 10 handles. Okay, that's 10 points on the NQ. And to me, if I really want to make a lot of money, like a lot of money, I am going to use write this down, a slightly larger bar. I'm going to give you golden nuggets right now. If I want to make a lot of money with order flow, the first hack, the first fast track is I'm going to trade a larger bar. You say, well, why? Because order flow gives you lots of signals. Okay. So let me explain this. When you use an order flow system, you essentially get lots of signals. You want lots of signals. Let me explain why you want lots of signals. As an active scalper or as an active day trader, we want as much opportunity as possible to hit our goals. Does this make sense? If I go down on time frames on the order flow equation, what's going to happen is I'm going to get stopped out more. The noise becomes larger and the order flow signals become less and less powerful. So inside of the signal suite, there is a lot. Yes, the secret sauce is filtering. Yes. The key here is to also understand that there's a lot of mechanics going into the software. So let's just go in here and just share a few little nuances, okay? A little couple things that may or may not be aware of inside of the tools. Inside of the tools, we have the ability to turn on volume, bar volume profile. We can turn on the histogram. We can turn it off. We can make the software look like a volume profile on the candles. We can also have volume, total bar volume. To me, I don't need it. I don't necessarily need the bar volume because I'm not trading the actual profile. What I do is I don't actually trade the volume profile inside of the candle. You say, well, why not? Well, because I have a signal suite, this whole powerful signal suite is going to take the volume. So let me write this down. I'm going to remove the need. I'm going to remove the need for you to have to make sense of the information. This is the first hack. Remember what I said? I'm going to save you years. Instead of me trying to teach you how to use the histograms and how to teach you how to use the bar volume profiles and how to read the volume, none of that's necessary. What's necessary is that I teach you how to use the signals. The signals is everything. The signals is what we've built down here to get you to make the money that you want to make. Okay. Now, what we're going to do is we're going to go to the bid ask imbalances. I can turn on and off the imbalances. What this tells me where, okay, I had strong buying and selling. I like to see that. I like to see the candles highlighting in red or green because that tells me a little bit about the impact of the order flow coming in. So I will leave that on. Unfinished auctions. Unfinished auctions are noise, very powerful, but noise. There's no need for them. It's just a line on your chart. Everybody goes up and down about unfinished auctions. They're great. They can be traded very well, but you're not going to make a shitload of money trading unfinished auctions. Like it's just information. It's stuff that people talk about. Sounds real sexy on paper, but it's freaking useless if I'm trying to trade a whole lot of accounts and make a whole lot of money. Block trades. Okay, great in theory. Block trades are great in theory, but what block trades are going to do is they're just going to tell you when the big boys are stepping in or not. Well, we already knew the big boys are stepping in. Why? Because we're going to use the signals to identify patterns in the order flow. So I don't look at block trades. And the reason I don't look at block trades is because block trades are subjective to each market. Every day it changes. Here's the problem. In order flow, maybe yesterday, let's say you're trading the S&P and you're using a 50 block trade as a big order. Well, what happens if tomorrow 50 lots are not big? Maybe 75 lots are big. What about the next day? Maybe 50 lots are too big. And the next day it's 25 blocks. That's the problem with understanding block trades is that every single day, the size of the big orders that are coming in are changing, which means I can't run a profitable business on shit that's changing every single day. That makes no sense to me. So this is why, yes, the software will tell you what it's doing, but I'm going to narrow down the secrets to why I believe I can make you a profitable trader. I know that if I show you what to look at, that's the important part. Okay. Now, volume clusters. I want you to write this down. Volume clusters are everything. Everything. You want to know why? Because volume clusters tell me everything about volume in the candle. Okay. So let me put this down. Very important. Volume clusters. Okay. Now, volume clusters, why are they important? Volume clusters tell me volume divergence. Volume clusters will tell me absorption. Volume clusters will tell me reversals. Volume clusters will tell me continuations. Now you can understand why volume clusters are pretty damn powerful. Does this make sense to you? Critical, 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 critical. We're going to talk about this. Okay. Does everybody understand? We're going to pay a lot of attention to volume clusters. Why? Because what that means is inside of a candle, there's a whole lot going on. There's a profile, right? There's a wick, right? Maybe there's a lot of volume down here on the wick, and yet the bar goes this way. Well, how can all the volume be down at the bottom, but then the candle goes up? That's a pretty important story. That's a very important story. It happened right here. Take a look at this. All of the volume in this candle right here. Okay. And this candle right here, volume cluster, all of the volume is at the bottom of the candle. Okay. And the volume stayed at the bottom, yet it went up. What that means is price and volume are going in the opposite direction. And when you look at volume and how price reacts to volume, Jesus, I'm going to promise you there's a lot of money to be made in what we're about to show you. Okay. Volume clusters are critical. Okay. Delta, delta critical. So let's talk about delta. Delta is the story. It's the net outcome of the buyers and the sellers. So every single candle, there's a number. And on a candle, when there's positive delta, it's going to be up here. When it's negative, it's going to be down here. You can see up here was positive 294. You can see down here was negative 49. Now we can choose to see the candle with a bar or just the numbers. Sometimes it's nice to just see the numbers because it cleans up the chart a little bit, makes it a little bit easier to read. But volume delta is critical, and I'm going to explain why. Because what you may or may not know is that this really freaking complex piece of tool down here, right? You can see all of this table. There's a lot of information going on in that table. 90% of it is reading the delta, the impact of the delta. Why is delta so important? Because delta is the exchange of buyers and sellers. It's when buyers are more powerful than sellers. It's when sellers are more powerful than buyers. It's when price goes against the delta and when delta changes price. So we want to have as much information about delta as possible because it's everything about buyers and sellers and the order flow exchange. But here's the critical part. Okay. We've built the tool so that you can trust the signals to tell you everything that you need to know. You do not need to know how to read this table. We've built a tool that's going to do all of that for you. And what's going to happen is we can look at other tools like big money print. Big money print is just when we really, really see big money stepping into the market. So you'll see, good example, if I look at big money print on this reversal down here, this pivot, watch what happens when I turn on big money print. Big money print, it happened right here. As soon as the big money came in, that's where the big freaking lift happened. It's interesting. As soon as the big money came in here, that's where the drop happened. As soon as the big money came in here, drop, right? So big money print has a lot to do with the market. And when you turn it off, you can actually see it just makes it a little bit easier to see where the big money's stepping in. And sometimes traders like to see when the big money's stepping in. I know a lot of traders that prefer that. It just gives them a little bit more information, but I'm not. Uh, there's ways in which we can trade big money. There's a signal called big money print right here. Big money. And big money is ultimately a tool that allows us to filter the big money. But I'm not a big trader of the big money print. I mean, I like to use it as information, but I prefer to use stuff that I've traded very successfully for a very long period of time. And I would prefer to teach you what I know makes a lot of money. Yes, big money can make you a lot of money, but I personally haven't traded it myself. So therefore, I don't really want to spend time teaching you something that I can't validate for my own trading experience. Does that make sense, guys? Give me a yes if that makes sense. Can't big money do a lot of manipulation? Yeah, big money can do things. And the thing about big money is that you could have big money step in, but the market absorbs it and therefore it doesn't give you the right information. It's just a bunch of bullshit. And it's like, no, not interested. Now, up here, we're not going to, this has nothing to do with heat map. So let me explain the heat map. The heat map, okay, the heat map is just an extra fancy way of like looking at the delta a little bit. And I don't think you need any more colors on your chart. So we're going to keep it off. Now, the table, this is everything. The table is the details. If I click on show, I don't have to see it. I can turn it off if I want to. Why? Because if you understand how to set up everything, which I will do, for you. We will set everything up for you. We will give you all the settings. We will give you all the information. We will give you the template. You do not have to do a damn thing. All you got to do is come to the class and we'll show you how to do it. I want everything to be on. Okay. I want to be everything on, like everything on that I need to be on. And what this is doing is it's basically showing me everything that I need in a summary table. Okay. Now let me explain the summary table. The summary is looking at volume, delta percentage, cumulative delta, just delta by itself, bid ask percentage, sell side volume, buy side volume, absorption, state of the market. And when you look at all of that, that's a lot of information. That's a lot of information. Okay. And what we've done is we've built a tool set. Okay. We've built a tool set that takes the table. Okay. And feeds the signals. All of this information here that is feeding our trading signals is from a combination of price and the table. And you do not need it on. It is not necessary. When everything is feeding the signals, it's just nice to go in and teach you why the signal's happening. Let me ask you a question. When you're driving a car, okay, true story. When you're driving a car, do you drive with the hood open or closed? It's pretty freaking straightforward. How many of you guys drive with the freaking hood up? You can't see. Traders, are you guys here? You guys, is only Renita's the only one? Is that a question? Yeah. How many of you guys drive with the hood up? Nobody. Nobody drives with the freaking hood up, right? So you do not need to drive with the table up. What you need to do is understand what it's doing. So a good 5 minute primer on, hey, this is everything, but you don't need to have it on if you have the signals doing what you need for you. Okay. So I'm going to turn the table off so that I can make the chart look like this. How many of you guys would agree that that's a pretty clean chart? Yes or no? Oh, yeah. It's critically clean. Super, super clean. Do you know that today, if you followed what I'm going to be teaching you on Saturday or this week, that you would have made so much money, probably more money than you've ever made in a very long time. I can see the chart right now just by looking at this. We're going to turn these signals off for a second, and I'm going to turn off volume. We're going to turn off confluence. Okay. So what I want you to do is we are building filters, and I'm continuously adding to this software because the future of Tickblaze is trading rooms, the future of our algo programs, a lot of it is going to be based on order flow. In fact, we're putting together an order flow team. Jeffrey, he's one of our lead instructors. Him and I are getting together with our other instructors that we're bringing in. We're going to be teaching a lot of order flow, right? We're going to be making a big shift into order flow, how that's going to be working, how that's going to be trading, what traders are going to be doing with order flow. And I'm going to explain why, because there's a lot of money to be made. Um, the key here is understanding why. Okay. Now, what we're going to do is I'm going to show you a few things. Okay. So watch this. I'm going to go up, bottom up. Okay. If I want to have the heat map signal here, there's a heat map. Not a lot of signals. Yeah. You see that? It's like maybe a couple, maybe two today, three, not a lot, right? Not a lot, right? So if I'm going to run a business, I'm not going to run a business off a heat map. Big money. Okay. There's a few, but take a look. Big money stepped in before the reversal. Isn't this interesting? So big money stepped in here, but the market absorbed that and then pushed. Look where big money stepped in. Big money stepped in here. Then it kept going. Then it reversed. Big money stepped in here, then here again for that drop to happen. Big money is not an entry signal. Big money is a holy shit, they're going to move the market signal. Does this make sense to you? Everybody understand why big money print is really about the big boy stepping in and moving the market? That's the key. And I couldn't have used a better example. Now you know what's going on with big money. So we're going to turn big money off because I'm not going to take my entries using it. Okay. Now, okay. There's a few things in here. We're going to talk about confluence. Let's talk about confluence. Confluence, to me, is one of the most powerful signals that you could ever trade as a trader. So powerful that we are building an algo around this signal. We're doing a lot with this signal. Okay. Now, let me show you this. What you may not understand about what confluence is, I want you to write down CO equals top three signals. Okay. Very important. Why? So let me show you this. If I go back to the table, I put it on. Guess what this means? When I get a confluence signal, it means on this candle, everything leading up into this candle was messy. And on that bar, the heavens aligned inside of price, inside of absorption, inside of delta, inside of buy volume, inside of sell volume, inside of the relationship to delta, delta volume, delta percentage, everything lined up for confluence. That is powerful. Why? Because what that means is you do not need to look at all the information. I don't need to study the 400 versus everything, but take a look at this, right? Absorption is not a part of the delta signal, so we're going to turn the table off. We'll turn absorption off. It's not necessary. And volume is not necessary. We're just studying the delta. So this is the state of the confluence right here. So I'm studying five in one. Five elements of market delta line up on that candle. Okay, does this make sense? And then on this candle again. And so what that means is that take a look. The candle before, it was messy. You've got red, you've got blue, you've got gray. It's all messy. Then the next candle, everything lines up. Look, you got state. What does state mean? State is when you have price and delta going in the same direction. So if you take a look at this candle, the candle was blue, which means it's an up candle, and I have positive delta. Sometimes you're going to have a down candle. Look at this. You have a down candle here, but positive delta. Look at the state column. That doesn't make any sense. How can you have more buyers than sellers, but price is going down? Like I said, order flow is going to confuse traders. And what we're going to do is we're going to use the tools inside of the software to identify, okay, to identify the best confluence signals. Now, let's zoom out. Take a look at the confluence signals. Now, just on this trend alone, if I waited for the EMA cross right here, that's not the entry. This is 1, 2, 3, 4. That was a stop out. On that whole run, I've got 4 trades on that whole leg that produced huge trades. Okay, let's continue down. We would not trade these. Why? EMAs are not in the right direction. Not trading that. EMAs are not in the right direction. Not trading that. EMAs are not in the right direction. Not trading that. EMAs are not in the right direction. Right here. Boom. Look at this trade. 1, 2, drop, drop. EMAs are on the right direction. Perfect trade. Perfect day trades for these markets. Look at this. Market's already given me confluence. Bad time to be trading. Markets are closed, but entry was here. Markets are going up. Another confluence here. But we're at the close, so I wouldn't be trading here. It doesn't make any sense. Confluence means nothing going into the close. Makes sense? So confluence, massive opportunity. So what we're going to do, we're going to write this down. And these are the signals we're going to talk about. One, we're going to look at confluence. Okay. Next one, flush reversals. Flush reversals, okay, are a very unique, interesting, it's a really unique tool. And why? Flush reversals tell us where you get a pattern in the market. And a flush reversal happens when you get an up candle with negative delta. It means the market absorbed the delta. Remember over here where I said, hey, we get a down you get an up candle here Look at this. You get a down candle here and then an up candle, but it's positive price, but negative delta. Flush reversals to me are not part of what I would normally trade as a signal. It's good to show you when the market is absorbing the signal. So flush reversals are not meant for entries. They're meant for understanding. Does this make sense? Delta divergence, okay? To me, delta divergence is not really a good trading signal. And I'll explain why. A lot of traders, you hear people talk about delta divergence. Delta divergence is meant for me to understand when the market is absorbing the delta. A lot of traders will try to trade delta divergence as an entry. In my experience, you're going to get run over. Delta divergence is really good for understanding when the market is absorbing the delta. A lot of traders try to trade delta divergence. I have not yet seen a lot of success for it as an entry. So once again, delta divergence is information. Okay. Why am I going through all these? Because I'm here to show you that we have signals that are going to identify everything that can possibly be identified in the market. And yes, we will, Al. I'll go all over that. Okay. Jeffrey and Pete, can you do me a favor and can you message Dominic and tell him that I'm not going to be in the meeting because the presentation's going longer?
Sure.
Dominic's head of marketing under the BTS division. So just tell him that I'm doing the presentation and I'm spending more time with my traders. I ain't ending this one soon, guys. We're going for the longer webinar today. Are you guys good with this? We're going to teach you everything I can before the boot camp. Make sense? Do it. Unless you guys want, I can go take other meetings, right? No, you guys good with me staying? Okay, perfect. So I'm going through all these because we're going to build the thesis around really profitable trades. Trap traders, okay? Look at how many trades are on a trap trader, okay? Trap traders, okay, to me, when I first learned about trading order flow, everybody talk about trap trader this, trap trader that, absorption this, absorption that, blah, 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 blah. Trap traders is a frenzy. Look at how much information comes from trap traders. Trap traders, it's not good. And if I go to bar direction, it's going to filter that out. It's confusing as F. Exactly. Trap traders, if I turn the bar patterns on here, I can filter down a little bit with the bar patterns, but it's still not enough. Trap traders to me is like a recipe for getting smoked. And a lot of traders learn this from order flow traders, and I think that it's not good. The only time a trap trader would make sense is if I'm trading on an S&P chart with maybe four tick Renko bar or a 6 tick Renko bar. That and only then would it make sense to do so. Okay. Now we're going to talk about volume divergence. Volume divergence to me is one of the most important things I can ever teach you. Okay. In the equation of order flow signals. So we're going to go up here. We're going to add it to the list. Okay. Volume divergence. Make sense? Now, we're going to talk about volume divergence. Volume divergence is when I get, take a look at this. Volume divergence is this here, is you can see it. You can see it like a sore thumb. It's when you get a candle and you get these volume clusters stick into the bars, okay? And to me, okay, what I like to see is it's interesting how volume clusters work. I trade volume clusters with direction, but when volume clusters end up becoming the reversal, I want you to take a look at where the volume clusters end up becoming the stopping point for the market. Take a look at this. They go right up to the volume cluster. Down here, they go right to the volume cluster. And so normally volume clusters, when the market is in an uptrend, okay, what I'm looking for before the market rolls over is I'm looking for failed market, retest of the volume cluster. Same thing down here. Failed market, retest of the volume cluster. Now, we're not going to trade this because to me, that is too subjective. One thing you are going to learn with me is that I am 100% mechanical, meaning if I cannot quantify, Sean will not allow subjective traders in my presence. It pollutes the environment. It brings nothing but bullshit and losses. Okay? Why? I just, everybody has an opinion. Everybody thinks the market's going to do this and the market's going to do that. And no, 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 no. I am 150% all about the signal, all about the accuracy of the signal, and all about the risk and reward and the win rates of that signal. Period. That is it. That is all. If I cannot quantify the signal, it does not exist in my presence. Why? Because I would rather run a business where I could scale it and put massive capital behind it because I know everything about the signal than just to hopefully have an opinion on the signal. Does this make sense, everybody? Now, stacked imbalances. Stacked imbalances are interesting. Stacked imbalances, okay, are when the market gives absorption and it gives information that the buyers and the sellers are aggressive. What's really important here is that I want to see stacked imbalances on the candles that I was planning on entering based off of other information. So what I like to see is I like to see stacked imbalances plus confluence or plus volume divergence. Because what that tells me is I'm getting a double banger or I'm getting multiple powerful data points helping my trade. So let me show you why that's important. When I go in and I have stacked imbalances, okay, what I want to do is I want to look at adding volume divergence and then I want to add confluence to the trade. Now take a look at this. What I'm able to do is I'm able to go in here and I can see that on some candles, I get two or more filters. And I've built a filter in here that allows us to go to minimum signals 2, which now I've basically removed the instance of not taking signals unless I get one or two or three of those instances. Now that will cut your trades down, but it's going to increase the efficiency of your trades drastically. And what I'm going to do is we can go back and we can just leave one for now. And that way it's not being too restrictive. And we'll show you that, right? But what I would really love to see is when I'm trading a downtrend like this, market opens, market gives me the EMA cross right here. Boom. Right away, I get two signals. Right away, I get one, one, and then three. This candle's powerful. That candle is very, very powerful because that tells me that inside of that candle, I had confluence in the delta tape right here. I had stacked imbalances selling aggressive in the tape. I had volume divergence, which means as the price tried to go up, volume got stuck and the volume candle dropped. And look what happened. They came back up to test the volume cluster, and that is where the market dropped on this candle. Powerful candle. Very, very powerful candle. The reason I like to do this on bigger bars is because it just makes more, it's more powerful, right? I can come in here, watch this. I can change the EMAs a little bit. I can make this go to like a 5, and I can put this down to a 13, make them a little bit more responsive, and take a look at how clean those EMA shifts are. Now I know that I can take that EMA signal all the way up. And what's really cool is that you do not need to take a trade unless you get multiple stacked signals on your candle. And why do I want these stacked signals? Because I could have added flush reversal. I could have added everything. And another thing that we can do is we could start really stacking the chips. We can add trap traders. We can add delta divergence. We could add flush reversal. We could add big money print. We could add that heat map. What I can do now is I can go into the minimum stack signals and I can say I'm only going to take trades where I have three or more. And what's really powerful is that as you take a look here, what are you seeing here? I can now take all of the data points from the signal generator and I'm able to just look at where the most powerful trades were. To me, this candle right here is critical. With the downtrend, EMA's crossed right here, right off the open. That candle was the start of the morning. This candle right here was the rest of the flow. What's interesting, this whole trade up, I did not have anything where I had stacked confluence to the three sides. I didn't have three. And so you can maybe put it to two if you feel you're not, you put it to two like that. It might give you a little bit more noise, right? We're going to show you which ones I want to trade on the bootcamp so that you understand which ones we're going to be using and which ones we won't. But this is where power lies because I could stack it all the way up to 8, 7, 6, 5, 4. Look at this. Four trades. That doesn't make it me more money. Just because I can take more data doesn't make me more money. What I want is I want to be able to capture the right data inside of these trends. And the only way that I've been able to do that over the years of my trading with very high degrees of success is not worrying about all the stuff that doesn't matter and only trading the ones that does. Make sense? I will only trade two or more signals. I will trade two or more signals in an environment where I can stack those. These are the ones I would rather trade. I would rather trade these signals here in a downtrend and everything else that we do, everything else that we trade in here is going to be about risk and reward in the brackets. And so when I look at the efficiency of how we take these trades, these are the trades that happened today on the Nasdaq, and any one of these trades could have been traded. What's more important to me though is where do I place my entry? Where do I place my stops and targets? And what did I tell you about earlier today? What are we trading for? What are we trading for? What was the word we used? What was the word? Expectancy. Herbert got it. Expectancy. So in order to deliver high expectancy, you need a really what? What do you need? What did we talk about? You need a powerful signal, you need a high win rate, you need largest risk reward. I've spent this entire presentation narrowing down powerful signals. This software is designed to give you very powerful trading signals. My entire job is to increase the power of the signal. I've spent years studying the signals. Okay. I've narrowed it down to what I like to believe is the three most powerful things we can look at in combination. We can look at, you might want to add big money, but I think I said it, like I said, it's not going to make or break the difference. It's not going to add a lot. Like I said, I would rather look at, because when I see volume divergence, like these VD signals, I know what volume divergence is doing. It's looking at volume divergence. It's looking at absorption. It's looking at reversals, right? Like I said, it's looking at a lot. So to get a volume divergence signal, it's like 3 or 4 in one. When I get a confluence signal, it's 5 signals in one. It's everything. So when I line these up, I'm not lining up one little signal. I'm lining up 4 and it's all happening on the same bar, or I'm lining up 5 and it's all happening on the same bar. Then when I look at stacked imbalances, which is the SI is stacked imbalances. And what we can do with the stacked imbalances, so let me show you this. It's important. Let's go down to signals. Let's turn off the volume divergence and confluence. Let's look at the stacked imbalances for a second. Stacked imbalances, what we can do is we can freeze the tape. And in the stacked imbalances, what we're able to do is we can freeze the tape. When you freeze the tape, what this means is as the candle is going up and down, up and down, up and down, up and down, as soon as I get absorption here or aggression, we stop printing any more order flow. And that's going to give us a different signal. So let me show you what's going to happen with freeze the tape mode. I'm going to refresh the charts because before I didn't have it on. And stacked signals, when we look at stacking signals, look at what happens. A whole lot of different information has now just appeared. Look at the candles here. What we've done is we've basically stopped printing order flow, stop printing order flow, stop printing order flow. Do you remember, has anybody in here ever remember Connor over at Futures Analytica? Anybody ever know of that software? You guys ever heard of that? Futures Analytica guy? Okay. A big part of his quant research and a big part of his mathematical studies that they've done is on spoofing. And the spoofing, it was all done to do with stacked imbalances manipulating the inventory. So what you can take a look here is that what we're doing is that when it comes in, we stop printing because what you can do is you can literally take a short right here and catch that scalp. Take a short right here, catch that scalp. Take a short right here, catch that scalp. Short right here, scalp. Short right here, scalp. All of those scalps would have been profitable. But now when you add the rest, look at this. If I put the other signals, volume divergence, confluence, and then I put the signals on, and I put a minimum of 2. Take a look here. Cinnamon's minimum of 2. Look, now we've cleaned up the chart a little bit. Now you can see that on the way down, right? Look at this. Look at this candle here. Isn't that crazy? You have an up candle. You have an up candle that basically showed us down confluence and down aggression. That's where we knew the market started absorbing the data. Same thing here. Look at this. You got stacked imbalances. And actually, I have the filter turned on wrong. That was my mistake. Let's go here to the table and let's go to signals. Bar direction required. I'm not sure why. Yeah, that's okay. There's no volume divergence. Wait a second. Interesting. Gonna check on that one. Sometimes you'll see it, but either way, the point of the matter is that you can use stacked imbalances inside of the bar with freezing the tape. So when we look at this information, you can see this one here was confluence and stacked imbalances, volume divergence, stacked imbalance, confluence, stacked imbalance, volume divergence. And the point is that when I'm using stacked imbalances, we can choose to use it on the freeze the tape mode or on the mode that is not using freeze the tape. And so that kind of shows you like on this uptrend, look, boom, 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 another signal, boom. There was 4 really great trades here. Look at this. The market's closed, but you can see the difference. And so we're going to be able to do that. We can control that if you choose to do the freezing of the tape. It really just depends on how you want to see the aggression in the order flow. And so where I really, really think this software does its job is that, and the strategy does its job, is that when we get a signal, okay, I wouldn't personally trade anything until at least the first minute is closed. So I will not trade anything until the first minute of the market is done. So let's go here. Is it bar close or bar update to get a signal? Well, we will enter on the bar close, Abraham. That is a great question. But what we will do is we can leave the stacked imbalances on to show it intra-bar. And that's the where we can see here, we can see where the aggression kicked in. You can see where the aggression kicked in. We can see where the aggression kicked in. The problem of doing this is that sometimes you will miss other information in the order flow. So my suggestion is that if we are not trading stacked imbalances intra-bar, like I'll give you an example. If unless we as order flow traders were trading this long right here, as an entry to ride that up, there's no edge or there's no additional benefit of having the freeze the tape mode on because we're not entering mid bar. The rest of the signals require us to enter on bar close. So in the instance of these signals, what I would do is I would ultimately leave the freeze the tape off, refresh the chart because we're not entering intra bar. The only time freeze the tape matters, mode matters, is when we enter intra-bar. And take a look when we take the trade and we change the trade. Look at the difference, right? Now we can go to signals, minimum stacked imbalance signals. You can put one, you can have one just so you can show it. But the point is that's the way we look at this. Now, does everybody understand that? It's a lot of information. Now we're just scratching the surface. The point is that if you were trading these signals today, you would have made a shitload of money. A shitload of money. Why? Because we're doing so in the right context. Jonassy, that's why we need the boot camp. Because everything up until now has been about the logic inside of the tool. Everything up about now has been under the hood. We do not drive with the hood open. Makes sense? We do not drive with everything out in the open. My job now is if I'm trading like this, that's the hard right edge. We do not take a trade until the first minute is done. So we do not take a trade. There's the first minute. So there is where, right here is the start of our day. As an order flow scalper, the reason we don't trade the first minute, I'll tell you why. There's a lot of what we call fundamental balancing happening in the first minute. Even the first 5 minutes is a lot, but there's a lot of good trades in the first 5 minutes as an order flow trader, so I don't skip the first 5 minutes. And what we're going to do is we're going to go bar by bar, bar by bar. There's the first trade. So what we do is we enter, bar close, and the rest of our boot camp is going to be on stop placement, strategy placement, money management, risk and reward, and how we dive into execution and trading. I believe that if you follow my rules around this, I will change your business. We are going to build brackets. We are going to build a trading plan that is going to tell you exactly your stop size, your risks, so that we can build this for the prop firms. And how are we going to position the targets? Does this make sense? Our whole goal for the boot camp is building the brackets and trading the system. Okay, we are going to build the brackets. I'm going to show you how to structure the trading plan. We are going to then trade it, and we are going to build this. Now, for me, I'm all about bigger R multiples. As a day trader, as a scalper, if I'm trying to scalp and I want big expectancy, then what I'm going to do is I'm going to take more trades and I'm going to have a bigger R multiple. So what we can do is we can basically set this risk and reward as our there's our stop loss. Okay, it's a 100 tick stop on the Nasdaq, and we will go for 1, 2, and 3 R multiple trades, or we can go 1, 1.5, and 2 R multiple trades, whatever is better for you. I think for us, we can do that. So we can go 1, 1.5, and we can go 2 to 1. What does this do? This gives us a bigger R multiple trade. We move our stop to break even at 75% of your first target. So if our first target, okay, if our first target is, let's just talk about it as a 1-to-1 R multiple. And if our stop loss is 55 ticks, Okay. Like if our stop loss is 55 ticks, or excuse me, 100 ticks, that means we would move our stop loss to say at break even 75 ticks. Right? Does that make sense? And we'll do that based off of this. Now, what's important is that you understand the mathematics behind scaling out. If you're going to scale out and you're going to take targets along the way, you want to stack your money on the biggest exit. You want to move as much out. You want to basically take as much out. Now, you'll do this on a micro. You don't have to do this on a full size contract because, I mean, that's a pretty risky business, right? But the point of the matter is that you can set it up where you take, say, 25% of your trade off or 30% off, and then 30% off here, and then 40% off here, right? You can do that and you can structure it in a way, or you can take 20%, right? You can, oh, that's the wrong, let's do this here. Let's just drive it again. I'll show you how to do this. We can set this up where we do 100 stop right there. And you can then basically build your risk reward to say 20%. And we do 20%. And then you put 60%, right? You want more position size at the second target. Why? Because that's where you increase your R multiples. Now, I'm not somebody that is big for trading for 2-to-1s and 3-to-1 systems. As a day trader, it's really hard to produce 2-to-1s and 3-to-1s and 4-to-1s. But as a scalper or as an order flow trader, it's not hard to do that. It's actually not hard to produce 2-to-1 trades on a regular basis. It's hard to do that if we're trading on a 5-minute chart or a 15-minute chart or a 30-minute chart, but we're not. We're trading on smaller bricks. And what that allows us to do is it allows us to build a bigger business on larger R multiples. And so I think it's just really good practice to know that. I think it's good to understand that if you took the signal, right, you would have taken an entry here. You would have basically been able to get your full trade out of this, out of that first signal. If you missed it, you could have executed here. If you missed it, you could have executed on any of those candles coming down, all the way down. The very worst thing that could have happened is that you entered at the very end of the trade and you got stopped out. But most people aren't doing that. Like most people would be in the trade as the trend happened. Now, if you think about this, this produced 2-to-1 on the entire trade. If we come back, this trade here produced 2-to-1 on the entire trade. Both signals produced 2-to-1. So now you're up 4 R's as a trader. Okay. Coming down here, you would have been out. You could have entered again. On the signal, you would have executed here. You would have been up. You would have been at break even. So take a look at this. You would have taken 1 to 1.5. So that's 2. That's 2. And you would have been 1.5 on this because you would have been stopped out here on the break even before it got to this. That's okay. Nothing wrong with that. So you're now 5.5. And here, this would have been the trade. Let's take a look at this. Just the way the cookie crumbles, you would have been in that trade and you would have been stopped out at break even here because this signal would have happened, but you would have already been in the trade from this signal. So therefore, you're at a 1-to-1. So you're at 2, 4, 5.5, and now you're at 6.5 R's. So that's basically 4 profitable trades on the way up. On the way down today, you would have taken the first signal here because that's the first trade that happened after the EMA cross. So you would have had essentially here, that's your first trade. You would have been at break even. So that is, Sean, I think you would have been stopped out because, no, you're confused on that. You're confused, William. I would not have been stopped out on this. Which one? This one? Which one are you talking about? This one here or this one? Give me the timestamp, William. So I'm not a mind reader. Give me the timestamp. Give me the timestamp and I can go to it. Timestamp. There's no 2 here. I don't have any 2s down here. Right here, there's a timestamp down here at the bottom of my chart. Give me the timestamp. So let's continue. This here is an entry here. You would have had target. You would have gotten to almost the second target, but you would have been stopped out on the rest of this. Okay. Okay, I think some of you guys are getting confused with what an R is versus I think we need to, this is the point of the boot camp. A lot of you guys are getting confused on R's versus money. So this is the stuff we're gonna teach in the boot camp. You're gonna look at how many risk versus rewards you're gonna get out of these trades. Now, I'm not talking about wins or losses. I'm talking about R's, risk versus reward. You got to remember that this is a 2-to-1 trade right here. Unless you got stopped out, you achieved the full two. Make sense? In this situation, you would have achieved the full two. In this situation, you've only would have received target one and target two. You would have been stopped out here, which means you would not have gotten the third target. You guys got to understand what I'm trying to do before questioning it. Make sure you understand what I'm talking about. Okay. The second thing here is that this one here would have only been the first target, which means you're only getting one R out of that, which is a 1-to-1 risk. Okay. Now the second one here, let's keep going down. White right here, you've got an entry. This one gave you the first target. You would have been at break even here, which means you only would have got one R out of that trade. Makes sense? Let's keep going. It's all about R multiples. It's not about wins or losses. It's about how many R's can you extract out of this. Okay. Now, let's keep going. Here is the entry. This would have been a stop. So we're on a stop loss here on this one here. Okay. And you would have been stopped on this one, and then you would have had another re-entry again. So let's just do that. And we'll re-enter again here. And this one here would have given you the entire two multiples. Like right here, you would have caught the full two. And then you ultimately would have been here at the close of this candle. You could have re-entered here. If you were running an algo, this would have entered. So you would have entered here for a profitable trade. You would have caught the entire, maybe, no, you would not have caught the full. You would have been at stop out. And we can trail. I'm going to teach you in the boot camp how to trail your stop. I'm going to teach you how to trail your stop loss. And the reason I'm going to teach you to do this is that instead of giving back, like I'll give you an example. Let's say we entered here. You catch your first target here. Your stop loss is now here. You catch your second target here. You almost get your third target. But why would you let it come back to here? You wouldn't. We would not. We would be taking your stop loss here. I will teach you what we call the squeeze method. And the squeeze method is going to give you the opportunity to take as much out of the market as possible. Does this make sense? A lot. We're going to get a lot out of the market. Okay. And essentially here, you would have had another trade here. This is a great example here. There was only one stop out today since so far, which is incredible. Here's another trade. You would have caught the full, 1-to-1, maybe 1.5-to-1 if it traded through. It didn't trade through. So we would have been out here for the rest of that break even. So you would have caught the full target here. You would not have taken it. Make sense? And down here, so here's the first trade to the short side. This one right here. You would have caught the first 1-to-1 trade. And what's really important here is that if you do not want to go for 2-to-1s or 3-to-1s, and you just want to talk about R multiples, if you think about how much money you're making on each 1-to-1, you're going to make a lot more money. If your expectancy is hitting the first target a lot and you're not hitting second or third targets a lot, then you can go for 1-to-1 right away, just as a really, really good rule of thumb. Let me give you an example of, and you would have made a lot more money because you're not getting out at your first target for full position size. Does this make sense? So we're going to really talk about quantifying risk and reward versus money management on the bootcamp because it has a very, very big impact on how much money you actually take home. versus it looks really good to see this hit a line, but you're not realizing that you're only hitting a line with 20% of your profits, which means you left 80% of the trade that didn't make money. That doesn't make any sense. And that's why when we do T1, T2, T3, the expectancy of each target is different. And that's the key. And this is super, super, super important about expectancy. I'm here to tell you expectancy. And those trades were in profit and then took loss are BS trades. What everyone did before Sean's boot camp is trying to be funny. Exactly. So uh, let's take a look at this. Target hit T1 again and didn't get to T2, right? So, and you can actually scale out here. You could do 1 to 1 and then 1.25, 1.52. Like, you know what I mean? Like you can do that if you want to, or just get 1 to 1 and just take a lot of money at 1 to 1 targets. I mean, you do not need to, you can do that. Now, here's a great example of 1, 2, 3, 4 trades winning. And at the risk of this one here, you would have caught the full 2 to 1, right? You can see that. And so I think realistically, the first goal needs to be win rate and 1 to 1 target. Does this make sense? If you are constantly if you are able to produce, like I'll give you an example, like today, every single one of these trades hit a 1 to 1 target except for one of them. There was only one stop out. So let's assume you took all in, all out. 1, 2, 3, 4, 5. There was the stop. So that's one stop. So 5, 6, 7, 8, 9, 10, 11, 12. 12 trades, one stop loss. Does everybody understand this today? With my system, with my order flow settings, the way I trade order flow, 12 signals for one stop. That's, pardon my effing French, but incredible. Okay. On the NASDAQ, that's incredible. Okay. Let's go back to a random date. Let's just go here. Okay. Let's just go here. Right away. Okay. We don't trade first minute of the day. There it is. First minute of the day. Look at this. First minute of the day is right here, and it comes right here. So we would draw a line in the sand. This is the signal. I'm just going to a random date. I didn't trade this on that day. So let's take a look at this. Right here, that's the signal right there. So the next candle, that's the trade. So we come in. There's the trade. You can see it. It's a volume divergence and a confluence signal right off the open. Bing, bang, boom. There's the trade. 1 to 1. Let's just do that now. Let's just do 1 to 1 trades. And let's just do all out 100% at 1 to 1. Let's just get good at you guys taking a target, a consistently profitable target. Okay. Just like that. Boom. So there's your first trade. Okay. So now we're out. So that's the first trade. And then the second one is a stop loss. You can see it here. And then the third one is a profit. And then when you see this, you start saying, well, shit, I could have got more than a 1 to 1. Yes, you could have. You could absolutely get more than a 1 to 1 on a lot of these trades. But the point is that uh, you need to understand that. Impressive, but I know it's Sean, so none of surprising. Exactly. So the point is that could you get more than 1 to 1? Sure. Is that how you want to run your business? Only until you really have dialed in how you're executing. We're going to study the max adverse excursion and the max favorable excursion of how far the trades are running in your favor. Maybe you can increase your targets to 1.5. Boom. What a concept, right? Like what a concept. Or 1.25. That really helps with your win rate and your expectancy. Here's another example of a trade, profitable trade, target. Boom. Here's another one. Target. I want to save this template because I've built something amazing here. NQ, NQ template, NQ OSP scalper, bootcamp, OSP scalper bootcamp. Okay, that way I can give it to you guys. So let's keep going here, guys. So let's just do the math. So there is another one. Target, 1-to-1. I'm just going to turn this one into, where was it here? This is the stop out here. So I'm going to basically just turn this to a red color so we can see that that was the stop loss. There it is. So that was the stop loss. I'm going to draw a little arrow so everybody understands it. There. So that's the stop loss. 1, 2, 3, 4, 5, 6 trades, all wins except for this one. But this one you would not have executed on this. And I'll explain why. Because your target's here, it's inside the same location. We normally don't want to take trades in the same location. You're inside of the same area. So that's something that I'm going to teach you. That's something that I would like to teach you guys when we do the order flow trades. We do not re-enter trades inside of the same location. If the trade pulls out of the box, yes. And let's say you did. Even if you did, you're still taking a stop loss there either way, right? Now take a look at this one. Reverse engineer, risk reward, boom. Take a look at this. Confluence, target. Look at this. Another trade. Another one here. Boom. Another one here. There it is. So here it is. This one chopped around, flopped around, boom, 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 boom. And did it ever give us a target? It did. It hit it right here. And basically, um, so we come in here, there's a great signal. You see this one's inside. You see this one's inside of the same area. We're not taking this trade right here. So there it is. This one here, it's all inside the same box. You understand that? I don't like to do that. I like to see if we move out of the box or if we come out of the box, but we're not. We're inside the same box. I don't like to do that. So these trades to me are not trades. Here's a great example of a stop. This one here is a stop. And then ultimately, this one here is if you want to take these, are all inside the same location, right? You can do that. It's really your choice. This one here left out. This one here is still inside. You can enter if you want to. It's your choice. If you want to enter again for a re-entry, it's your choice again. And you can see here that the next one was profitable, but not until you got kicked out on your stop. So like I said, back-to-back stops here. That's why we try not to enter inside the same location. Make sense? You see here, this one moved out. This one traded outside of the area. That's a key for another area. Make sense? Now we'll take a look at this. We can go here. There's a trade. That's a target. You see, and even in choppy conditions, like even when the market gets slow, you see the market pushed out. We traded outside of this area. Then we came back in. So when the market trades outside of the area, you can enter or you can enter here, either way. And you can see there was a lot of noise here. There was a lot of signals happening here. So this would have given you a stop out. This would have given you a profitable trade. You can understand that, right? And that's why sometimes until the market gets out, you might take a stop loss or two, get back in, and then take a look. Another profitable trade here. And you're going to decide how many trades you want to take. Like how many trades do you need to take? You know what I mean? Like I feel like this one here was a great example of you get your first trade and you get your first trade to the downside and it doesn't give you the short and you get stopped out and then you automatically get a long here for a profit. And then you get another long here for a profit. So you can see that as a day trader, your job is to take as many signals as possible. Try not to take them if they're not overlapping. If this one was higher here like this, that's fine. See here, this one traded outside of the area. Take a look at this. Risk reward. This one here was outside, clearly outside of the area. You see here how this one pulled out and then pulled back. You can take those because we've already traded into new territory. We pushed out and then came back. and you can see the profitability in that. And you'll see here that sometimes when the market's trying to figure itself out, like you might get a stop out or two and then drop down. But I'm not trading order flow at this time of the day. Like I'm done down here. Like where like to me, my perfect, like the perfect world for most traders as an order flow trader is you're going to be done within the first hour of the day. Like my goal for you is to be done order flow trading here, right? Like you're trading from 6:30 all the way to say 7:20, even it's a half an hour. Like why can't we just make all of our money in the first freaking half an hour? And you're going to see a theme with order flow. Like there was one, two, was a stop out, 3, 4, 5, 6, 7, 8, 9, 10 trades in the first 45 minutes. One stop out. If you go to today, if you go to today and you look at the first hour, 1, 2, 3, 4, 5, 6 trades, 7 trades, 8 trades in the first hour, all wins. Like, that's the point. Like, why not take 5 back-to-back trades every freaking day, right out the gates, and make all your money in the first 45 minutes and be done? Isn't that what we want? Isn't that the dream that everybody sees on TV? Tell me a yes that you would love to just every day come in 45 minutes, bing, bang, boom, the order flow software kicks in, does its job, and then you're done. Done. Makes sense? That's my job. My job is to show you how to do that, right? And like if I go back and I add more days, I go back and just take a look and say 5 days. Let's go back and take a look. It's incredible what we can do with this. What we can do with this is incredible on the actual aspect of just the data. And my goal, okay, is for you guys to basically make as much money as possible in as little time as possible. And my hopes is that you do not have to be sitting here trying to spend too much time doing anything. Like, let's take a look at this. So if we go, look at this. This is the open. Okay. First hour, first minute of the day. We don't trade the first minute. So even though this is great, looks great, it's fast. Very fast, guys. Until you guys get super, super confident in your abilities, why take the risk? There's the first minute, the cutoff. Look at this. I can already see this. I don't need to put a risk reward target. I can already see that. First trade, out the gates, win. I can already see this. I can already see this. This, depending on how tight your stop loss is and depending on where you got filled, sometimes, sometimes you can build it to do 55 ticks. 55 ticks puts your stop loss just outside the candle. But sometimes I also see a lot of traders that will take a trade. By the time they're ready to get filled, they get filled here, which means the stop loss is technically here. So it just sometimes the market will work in your favor. Never chase. Only ever take the entry at the bar close or better inside that candle. That is important. Very, very important. And you can see here that back to back, like win, 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 depending on which bar you got in on. Our software is going to show you where to get in. Does this make sense? Now, I don't preferably, like for me, I personally, as an order flow scalper, I'm somebody that likes to get in when the EMAs are fast and responsive. So for me, like you see, this is 13. I personally like to scalp with like a 5 and an 8 EMA. I'll explain why. Because I will trade this to the downside. You see this like that to me, this to me is as an order flow trader, this to me is an uptrend. Okay. But this to me is a downtrend, right? So like I will trade uptrend and then downtrend. I'm not waiting for really lagging EMAs. I'm looking for when we get the confirmation. And so to me, I would basically enter, this would have been a stop loss, but that would have been a win or a win. And this would have been a stop loss, depending on where you take the trade, right? Down here, take a look at this. And like I said, depending on where your entry is, look at this. Your you would have never got stopped on that candle. You would have entered and you would have entered, and both those trades hit your targets. Does this make sense? So, like, I'm telling you guys are going to make a lot of money doing this. And as long as you follow what I'm showing you, there's no need to worry about, can I do this? Is this something that the software is going to do everything you do? The only thing we're going to do is we're going to build the brackets together. We're going to set these up, and then we can determine if you want to go for larger or multiple trades or not, right? There's another thing that you can do, and we're going to talk about this, is understanding the pullback of a trade. And these are, I don't want to get in too much. We've already been talking a lot today and it's a lot to take in, right? But sometimes what we're going to do is in the boot camp, we're going to talk a little bit about, do I want to take a full size position, like in terms of like the bar? And like, do I want my stop loss to be at the outside of the bar, or do I want it to be somewhere in the candle? Because if I do somewhere in the candle, what that means is if the candle goes this way, I can go for a 2 to 1 and I don't have to have such big stop losses. But what that does is it risks the trade coming back. And so what happens is if this trade pulls back greater than 50% of the bar, you can see here that this would have given you full 2 to 1. And I'm a big believer of like there's two types of traders that cannot handle getting stopped out and traders that want higher win rates. So we're going to build two brackets for both of you. And either way, you can trade them profitably. We're going to build those two brackets. Does that make sense? And everything is going to be done for you. Now, we've also done this on Renkos. Okay. I've also done this on Renkos, and this is something that we're going to talk about very briefly because the rest of the time is going to be in the boot camps. Okay. So essentially what I've done is I've built it for Renko charts. I'm going to load the template NQ right here. And essentially what I'm doing is I'm basically, the EMAs are very different with Renkos. So when you do the EMAs with the Renkos, you can see that you can't do that, right? So what we're going to do is we're going to change the EMAs and it's going to be a lot different. So let me just pull that up here. So this is going to be probably a 21 and this is going to be 34. Let me see here. Yeah. Yeah, that's going to be probably maybe a 55. Just the way the emails work. Yeah, just like that. So a couple things here is that on the other one, I forgot to mention that I have a filter here. And this is something I want to cover inside of the bootcamp, bar direction. Bar direction requires a certain pattern for the filter to work. And then ultimately bar filters. See what happened here? Bar filters removes a lot of noise. It actually takes away signals. So depending on the pattern that we're going to be looking at, will determine the amount of signals that we're going to have. And then for the actual aspect of the bars, like for this, bar filters are everything. So we're going to use the bar pattern and you can take a look what it does. It just totally cleans out the chart. Like, and on a Renko chart, I really, really love the multiple signals on the Renko chart. Essentially, and the way that I like to do the confluence testing, I try to see if I'm looking at a chart and I look at the way in which the EMA's crossed. Am I trading a comparable fractal? Like, do you notice here? Do you notice here that this EMA crossed here, this EMA crossed here? This leg is pretty identifiable to this leg. That tells me, like, if I go here, 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 you can see here, here, here. That's how I know that the Renkos are set the same as the range. So depending on which one you take to, you can trade the Renko in a very, very unique way as well. And it just depends, right? It depends on, it depends on, yeah, if you want that, right? Do you use a smaller stop loss in Renko charts? Well, it depends. Like, and we're going to talk about all that in the boot camp. We've got a lot to cover in the boot camp. Yeah, lots. But did you guys learn something from today? Like we have only scratched the surface on how we're going to trade this. And we're gonna really dial this in. And I really believe that if you're going to really look to trade a very profitable edge, if you give me a couple of days of your time, I promise you that you will leave there with a master's degree on how to use order flow. Yeah. Seriously, like I'm going to give you years of my life into what I feel is the most powerful solution. Now, all that you need to do this is you need Tickblaze because our software is going to be running this. So you need the platform and you have a choice. You can trade your own accounts or you can trade for a prop firm partner. Like it doesn't matter which prop firm you use or where you buy your accounts for, it doesn't matter. No, you do not need level two for this. This is important, Ed. You do not need level two for this. Yeah. And I think I only learned that I've got a lot more to know. Yeah, exactly. You got a lot more to learn. Exactly. So there's not a lot that's needed. We are going to be covering two indicators. We're going to be covering the order flow signal pack. And if you want the level two pack, the level two indicators, originally I was going to spend a lot more time on liquidity, but I think what I'm going to do for the boot camp is just really dial in the um, the boot camp and just spend it on the order flow signal pack. Now, normally, if you're going to hire me one on one, I normally start at $15,000 for several sessions. I don't do one on ones. There are traders that have paid for me to coach them one on one. And so the way that we run boot camps is instead of me charging you $15,000 for a couple hours of my time, I will run a boot camp where I can accomplish way more. I can give you the same amount of coaching time, but in a group environment. And that way everybody pays a little bit. And then I can come in and I can spend the time to do this. Does this make sense? That way, the power of mass gives you the flexibility to come in and get my time. Does this make sense? It becomes very inexpensive. You leverage people, you leverage time, you leverage resources. Okay. And the nice part is you get me for several days. I'm going to teach you how to trade this. Heck, we'll even trade it together. I'll be trading it in front of you. Okay. And so, are you guys interested in going over the prices? Type of yes. If you guys would like to know the price, you'd like to know everything, yes, so that we can go over this. Super simple, super easy. It's really $750 for 2 days. We will come in and do 2 days back to back. I am going to be going over the systems, the software. We are going to be training you on the systems, the software, everything. And we're going to teach it to you. So the education is going to be all about the strategy. Yes. Totally different systems, Brian. Yeah. Brian's asking, how is this anything different than the trifecta? Totally different systems. In the trifecta, all we did was look at the confluence signal. We are looking at a combination of all the different systems together, signals, volume divergence, confluence. There'll be a little bit of an overlap, but very little. Yeah, very little. We're going to be talking about fractal analysis on bigger time frames for the bricks. So you're going to learn a lot more on this because it's only order flow. Yeah, this is really the best for order flow. No, this does not include the software. I don't think so, Pete. No, this does not include the software. Yeah. Pete, are you here, guys? Yeah. I do
No,
not think this
there,
includes the
there's
software.
there will be coupons that are inside the
Yeah.
deliverables page for that, and also
Yeah.
be sent out during in an
The
email
re
afterwards.
the reason we do this, guys, is that the boot camp is designed to teach you everything so that way you can make an educated decision if you want to buy the software, right? A lot of people buy software and they don't know what they're buying and they don't know if it's going to make them money and they so what ends up happening is they buy tools and then they figure, oh God, they get buyer's remorse, right? So what we do is we do the boot camp, we teach you everything. So that way when you buy the software, you have a more educated decision on what the hell you're doing. To me, that's like test driving the car, right? Instead, I'm giving you the signals and I'm teaching it to you. So you don't have to worry about if you buy the software, you don't know what to do with it, right? That's the biggest benefit that I can share with you. We will send you the coupons and everything. So you'll get a discount if you want to purchase the software. Yeah. Yeah. You will get both recordings, Ed. Yes. Yeah. Yeah, you will get both recordings. Yeah. Does this make sense? Fantastic. Okay, so what I'm going to do, because this is a boot camp and it's my time, so I have to be there and I got to block calendars and everything. I got to make sure that everything is dialed in. What I'm going to do is I'm going to make sure that I'm going to make sure that I know you're purchasing, and I'll tell you why. Because I have to arrange for the desktops, I have to arrange for the deliverables. I need to know who's coming. And if you are joining me, I need to know because I have to prepare the resources for you personally. I got to set up the signal systems, I got to do everything. So if you're planning on joining me to go over this and you're purchasing the software, or not the software, but the actual resources, I'm going to put together the training and everything for you guys. But I need to know, guys. So please put a yes. I promise you this will be the best 2 days you ever spend, and you will learn more in order flow in 2 days than you would have learned in a decade with anybody else. I can promise you this. Yeah. You are going to make a lot of money through this. And heck, you can even copy a few of my trades. I will be trading in those sessions as well. We will be going over the systems, everything. Yeah. No, Hamid. Yeah, no. The prices are the same. They're never again. Yeah. 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 So if you guys could do me please just put a yes if you're planning on. If it's a no, hey, I understand. Not everybody's in the place to do this. The other thing too is if you need to speak to somebody, you can put your phone number in and talk to Jeffrey. He'll be the one to speak to. Soon it'll be another. We just brought in Jason, who's one of our top guys that is going to be coming in, and he's going to be assisting on the sales side. Yeah. Yes, William, you can always get it now and watch the recordings. I think it's just as powerful. I mean, just as powerful. If you purchase the software, you get access to the course. So it's like buying a course, right? And if you can't be there in person, you ultimately, you know, you can access it through recordings. And most people watch things anyways several times. So the goal is for you to be able to rewatch them. So there's nothing ventured, nothing gained. Yeah. Yeah. 24 hours, I believe. Yeah, the price is good for 24 hours because this is basically pre-planning the event. Anybody that's going to be there is going to be here. Yeah, it's going to be purchasing it from the next 24 hours. Yeah. Makes sense. And it's a very, very good price considering you're getting the same coaching as if you were paying 10 to 15 grand. Yeah. Perfect. Are there any algos that Sean you yeah, so these order flow algos, we actually have a delta confluence algo being built right now as a result of this. We have freeze the tape algos. Delta heat map algo is yes, there's a lot of algos that are running these tools. Yes, absolutely. Great. All right, traders. Well, listen, remember Tickblaze is free to use, so don't worry. There's no barrier to entry. The only thing you need is a prop account or a data connection to trade it live with a broker or with a prop firm. You can normally get those data from the prop firms that we work with. And if you have any questions, we're always here. We're always just a phone call or an email away. It was a big event, right? It was a big presentation. There's a lot to take in. So please watch the recording. Make sure that you guys go over the details with our team. If you have any questions, send an email into support. Make sure you get on a call and meet with Jeff. I know Jeff, there's a bunch of people that have requested calls. So make sure that you communicate. And yeah, guys, enjoy the rest of your afternoon. I'm going to go grab some food and just take a break from the mic. My throat's a little bit sore. Lots of talking. Yeah, PM, no problem. You've provided your number. Jeffrey will be there. Yeah.
Just look for a 708 area code, guys, then and pick it up. That'll be me calling in.
Fantastic, guys. Have a fantastic day and enjoy the rest of your evening and morning wherever you are in the world. And we will see you on the boot camp. I'm pumped. It's going to be exciting. Take care, traders. Talk soon. Bye.